when you grant ACH service to an entity. It's understanding how they use ACH, whether they process for other entities, and if so, they're a third-party sender and doing what you need to do. As you've said a couple of times, Joe, we're the front line on this. And, certainly within institutions, oftentimes the customer-facing people are the front line to get that full understanding.
Welcome in, everybody. You're listening to Wrestling Payments, a podcast where we help payment professionals contend with the challenges of modernizing their payments operations and identifying ways to build for the future. If you're interested in payments innovation and modernization, you're in the right place. Now, let's get into it.
Hi, and welcome to this episode of Wrestling Payments. I am excited to have the two speakers I have today. I have Dennis Walker and Stephen Dillon. I know them personally. I think this is going to be a great session. We're going to talk about a word in banking, and the word in banking is third-party sender. I know when I was learning third-party sender, it was a word that took a little while to understand. What is a third-party sender? What does that really mean? We're going to get into that. Hopefully by the end of this session, you will know what a third-party sender is, and then you can make business decisions based on that. Before we get started, I want to introduce the speakers, or better yet, have the speakers introduce themselves, and I'll start with Dennis. Could you introduce yourself?
Thanks, Joe. Appreciate you having us on. My name is Dennis Walker. I've been in financial services for about 17 years. Half of that was spent in audit, so I like to call myself a recovering auditor. I spent a lot of time as the vice president of operations, managing ACH, our call center, basically deposit operations, electronic banking. And most recently, I was the first vice president of strategy and planning, where my job was just to kind of vet out new products, services, and verticals to see how they mix in with the company. So thanks for having us on.
Yeah, no, thank you. Stephen?
Hey, and again, thanks for having us. I'm Stephen Dillon. I'm a Treasury Services Compliance Manager at Eastern Bank. I've been in banking for 34 years, the last 17 years working in cash management services and focus on credit and compliance, and I'm happy to be here.
Excellent. Thank you very much. As I said, this topic is challenging. In this session, I hope the audience today is operations folks, compliance folks, risk folks at a financial institution, or as we get into third-party senders, it could be a payroll company. It could be a real estate investment company, someone managing a property, or a homeowners association. So if you're any one of those, this is going to be a good session for you. And we have a list of questions. I'm going to go through the questions and let my experts speak on it. And I do reserve the right to go off script and ask questions as well. And they'll be good questions, but I do go off script. As I look at our script, the first thing we have here is, well, actually before we go there, can you give your best definition of third-party sender?
I'll let you go first, Steve.
Okay, sure. My best definition of a third-party sender is a company that has ACH services and uses those services to execute transactions on behalf of other companies. So the company has an ACH service set up with a financial institution. They can process their own payments as part of that, but then if they go beyond that and they agree to process payments for other entities, then they become a third-party sender.
Anything to add, edit?
No, that was really good. I mean, I always like to keep it simple and just say it's an entity that sends money on behalf of someone else, right? Kind of using that low bar to really dig in. So.
And just for level setting, again, ACH is automated clearinghouse transactions. Those are direct deposits, could be a mortgage bill payment, any one of those things. The only entities that can really send those into the network are banks and credit unions. So a third-party sender is kind of duplicates all the abilities of a bank, but they're not a bank and they're not a credit union. And that's where the problem comes in, because the law requires banks and credit unions to make sure third-party senders are doing all the right stuff. So that's where we got to. So if you're a fintech that wants to start a wallet, a money service business, you may need to know that you are a third-party sender. May be a third-party sender. So that's why we're talking about it today. And it is a place of consternation for banks and credit unions. I know that I train a lot, and you always get that question, what is a third-party sender? And there's a lot of definitions, and you did a very good job at that, Steve. But let's get into some of the topics, because what this is about is really working with them. These guys have worked with them, so it's really down in the trenches. How does this really work? Our first question goes, how can you know if an ACH customer is acting as a third-party sender? Either one of you want to start with that?
I can start. I always like to say, follow the money. Who's the one that's requesting it to be sent? Where's it being sent to? Follow it all the way through to the financial institution. Steve deals with that, day in and day out. We only had a couple at my prior institution, but when I was training my team, it was always follow the money. Who's doing the request? Where's it going? How did we get it? Who has the authorizations? And that's kind of how we traced that and kind of plotted that out to figure out whether they were a third-party sender.
Anything to add? Again, it's like add, edit, or adjust.
Yeah. No, I think Dennis is and I think right. It's who owes the payment to whom, right? If a company owes a payroll payment to an employee, and some other entity is processing that payment, they become the third party, right? The primary parties to that are the employer and the employee, and now you've got this third party involved, and that's fundamentally it. Who's paying whom,
Yep.
and is the company processing the payment through your institution, are either obligated to make that payment or benefiting from the collection?
Yep.
Benefit of, yes. No, great keywords there, for the benefit of. One other fact about third-party senders in financial institutions. When a financial institution, because they have the keys to the ACH kingdom, when a financial institution sets up a company to send out payrolls or the like, there's a legal agreement that says, hey, payer, sender, you are going to follow the laws of the U.S. You're going to make sure all your entries are authorized, all of those things. And one of the keys to knowing a third-party sender is that company who's doing the paying or collecting, if the financial institution doesn't know who they are and they're using another company to create rents, that's where the third-party sender relationship is, because, the financial institution is responsible to make sure everyone's following the rules. And if they don't touch that sender of the payment, that's where these third-party sender rules come into effect, and they have to know, hey, I don't have this bakery that's sending out payrolls, but you do, and you have to make sure, because we have to make sure, that they're following the laws, they're sending out authorized entries, they're doing everything they're supposed to do, because we can't get to them. We can't touch them, we can't see them, so we just have to make sure you, third party, are following the rules. Yeah, that was good. And I think that's the end of my involvement in this. I'm just going to ask questions from now on. When you think of third-party sender, what are your classic examples of a third-party sender? If someone says, hey, give me an example of a third-party sender right now, who do you think of? Steve?
I think of a payroll company. I think of property management companies. I think of collections companies, and business services could also be third-party senders. Any of those would trigger my thought.
Dennis, those all your same?
No, those are the same ones. Those are kind of the third-party sender 101s that I would always kind of, CPA firms, things like that. So.
Excellent. I think I covered a little bit of this next question, but I need the experts. Why should we care as a financial institution if we have third-party senders?
Sure, I can start. We should care because there are many, many transactions and trillions of dollars nationally processed through the ACH network. And as Joe mentioned earlier, as financial institutions, we warrant all the entries we put into the network, right? We need to know what this money is, where is it going, what's the purpose of the payments. We can't, blindly facilitate illegal activities because we're not going to dig into knowing whether or not somebody's acting as a third-party sender. So that's really a lot of it, is that we care, and obviously there are laws and rules that go along with that, but as participants in the network, we care that we know that the entries we're sending out are valid, they conform to the ACH rules and to laws.
Yeah, just to build off that, we talked about it for Joe. You said we have the keys to the kingdom. We're the gatekeepers, right? Even though we might have contracts with our subsidiaries, with our customers, no matter what, we're getting hit. We're the bank. We are responsible for everything, just like Steve said, that goes into the network. So,
And, I just as a commentary, I said I was going to stop talking, but I'm talking. Just as a commentary, it's not because, you're the boss of me. It's because there are laws. And, there are regulatory agencies that are going to come down on you if you don't do this. I mean, even not related to this, I think, but, customer due diligence, extended due diligence, beneficiary ownership. These aren't things that you came up with. These are laws that the government is forcing you to be responsible for. So it's not like you want to know because it'd be nice. You're going to get fined. Even, to the extent of, we've had financial institutions send out fake accounts and lots of bad things happen and they get fines of millions and billions of dollars. And it's not because they decided they're not going to pay attention to laws or are going to pay attention to laws. It's a legal framework that you have no choice.
Hey, Joe, can I add a comment on that?
Yeah, please.
Yeah, no, you're absolutely right. And, when you think about something like money laundering, right, and part of that process is layering and how ACH could be used for that, and particularly if you are not the third-party sender, but that ACH originator, that company they're dealing with that's detached from the financial institution, the financial institution doesn't have a relationship with, doesn't have agreements with, well, that could be a great opportunity if you're in the money laundering business to try to move money around that way. Mm-hmm. You've got some anonymity that you wouldn't otherwise have.
Right. And I'm an ACH guy, so I know what the requirements are all in place. I'm always surprised when an unauthorized charge shows up on a credit card because it's like, how did that get there? They should have not been in that network. I don't know card rules as well as I know ACH rules. I know ACH, there's a far less likelihood that a bad guy's going to debit you by mistake because you guys have to police the network. Our next question, I might alter this a little bit. It says the question is, why should our customers care whether they act as a third-party sender? And I'm going to alter it in this way. I admit that if you are not in financial institution or in banking or financial services, the word third-party sender is, what's that word? But the activity that third-party senders do, should financial institutions, I'm going to put you on the spot, should financial institutions be wary of them? Should they say, oh, we don't do third-party senders because they're third-party senders? Or is it just managing the relationship? Any comments on that?
yeah, I don't think we should be afraid of some of these different verticals. I think it's more knowing about what your risk tolerance is. And I think if you look back this year, that was a problem in banking, right? Over concentrated in certain areas. It's okay to say no to a customer, right? Maybe you can point them into another bank or, use your relationship to find them or bank them in a different way. But, establish your risk management parameters, know what your vertical is and the exact customer that you want to serve. And I think you can serve them. I wouldn't say no. I think it's for some of these CPA firms, there's good fee income, there's good deposits. Everyone is looking for deposits right now. Third-party senders are a good vertical for that. So if you can do it correctly and you can do it safely and soundly, it's a good vertical to do. I wouldn't shy away.
Steve, anything?
Yep, no, I agree 100%. I wouldn't shy away. I think it's about making an informed decision when you grant service to an entity, when you grant ACH service to an entity. It's understanding how they use ACH, whether they process for other entities, and if so, they're a third-party sender and doing what you need to do. As you've said a couple of times, Joe, we're the front line on this. And, certainly within institutions, oftentimes the customer-facing people are the front line to get that full understanding. But agreeing with Dennis said, yeah, there can be some real benefit to having third-party senders, bank with you, process ACH with you, and it works well, and it's all for good purpose. No reason to be afraid of it. Just make sure you're fully understanding what they do, how they do it, and who they deal with.
Yeah, no, I actually agree with you guys. Dennis, you kind of gave us a little peek behind the curtain in your answer as far as risk tolerances and risk appetite. Those are things that financial institutions understand, set, establish. I would argue that there are firms, third-party senders, that understand that all as well.
Sure.
And they set up systems, computer systems, relationships, all at the same level financial institutions do in some cases. So I definitely would not be afraid of a company that wants to be in this payment space, but they're not a bank.
I just to build off of that too, like say your third party sender doesn't. I think that's like a differentiator for your sales and bank to go in there and help them with that, right? To bring your risk team, bring your audit team to the conversation, to the table, to give them some guidance, right? That's a a competitive differentiator to help build that vertical for you.
Excellent. Yes, I think I segued into the next question perfectly. So you got that company that says, I want to be in the payment space. With that in mind, can one of you start with what the definition of a nested third party is?
Yeah, I can give that a try, right? So, and we'll use the CPA firm. We'll use a business services company, right? So we've got a business services company. They get ACH service through the financial institution, and then they go out and they offer to their clients to process payments for them as one of the services they offer. And so some of their clients sign up. The business services company is now acting as a third-party sender for those companies. Well, if one of those companies also offers similar services to other entities, they become a nested third-party sender because the companies they're processing payments for are another step removed from the financial institution has the agreement with the original business services company. So it's that much further in the dark as far as what's going on here, who are they, what do they do, what are these payments, and towards what Dennis and you were just saying. And this is where that financial institution discussion and decisions on risk acceptance and risk tolerance really could get stressed when you get to that third-party sender level.
Yeah. No, I think you hit it.
Extra?
You hit it on the head. I mean, in my former position under the strategy area, we came across a few different fintech firms, had really awesome business use cases, and they moved the money on behalf of their business customers that also had customers of their own, and so used to kind of drive our BSA team a little crazy. But when you come up with that game plan, like you can bank those kind of customers. You just have to be aware of what the risk is, like we've kind of talked about, and how to deal with those.
Exactly right. There are, again, I'm a fan of financial institutions. I think they're excellent at what they do. There are also companies that are really good at this as well. And if they want to play the role of having other third-party senders under them, as long as you can manage who are they originating for, what are they originating, are they following the rules, are they following the laws, it's good. It does get complicated.
It does.
So here's the day-to-day. Third-party senders are a thing in the ACH. They exist. They may not know what the word third-party sender is. And the rules say you have to identify them, but there's provisions that say if you find out later, you can. Just tell us they're a third-party sender there. What real-world scenarios have you run into where you thought this company was just a regular originator doing their own thing, and all of a sudden you got a clue? Wait a minute, that seems weird. What sort of red flags or steps do you take to identify your third-party senders?
You want to take that one?
Yes, I can start on that one. Yeah, so one of the things that can be done is to review our portfolio of clients and look for certain keywords as we had mentioned, and go through and actually take an Excel spreadsheet and filter it and look for words like property, properties, management, collections, accounting, CPA, and then look at what the results are there. And so they've got ACH with you, they fall into one of those categories, and maybe go visit their website. See if their website's offering payment services to their clients. Maybe look at the online banking setup at your financial institution and see if their ACH service is set up with a variety of company names or company IDs being used under it. These can be indicators. But I think that's a good place to start, and I know that it has been effective in identifying some.
Yeah, it's a great review control. One thing that we also did was at the onset of the relationship, we had every bank has like a set of forms that a customer fills out, right? But we include, what do they do? What's their principal line of business? Who will you be? Who are your customers? Like just very small basic questions that shouldn't take you more than 5 minutes to answer. Not a huge bother, but gives us a sense of who the customer is and what their purpose is. Who are they sending money to? Are they sending internationally and we didn't know? Where's the money coming from? Kind of stuff like that. Just to give us a sense. And, during our annual review process, that helps to kind of remind us. And, we have our relationship managers check in. Is there any, for our bigger customers, right? Are there any material changes in your business? And, have you gotten more sophisticated, less sophisticated? Like what's going on? And so that check-in helps too.
Yeah, no, it's hard. Those relationship managers are really good because you can
They're
ask
very
them,
good.
hey, what do they do? Oh, they do, and they explain, they know what their businesses are,
Yep.
and they can help explain it. Any, you mentioned the questionnaire, any follow-up suggestions that, beyond the initial enrollment, steps you could take to identify or follow up on third-party centers?
Yeah, I think, the review by going by keywords and company names, that can be done on an annual basis. That doesn't have to be a one and done. I think, again, educating the entire workforce at your institution, right? So that if you have an existing ACH company, and now they've made a request to add additional company IDs, additional accounts under different company names, that the people working with that are aware that should trigger the thought in them to have this third-party discussion about what are these payments. As Dennis said, it's understanding and really with specificity, what are they using ACH through your institution to pay or collect? I mean, the customer-facing people, it can't just be they're making payments or they're making collections or they're doing both. It needs that level of specificity. But I think, as they add new companies to their service, that could be a sign.
I think it's also looking deeper into the actual payments too. Like, does something look funky? Is it different than what they've been doing before? Looking for those red flags where something's changed. And sometimes, our fraud or BSA teams or even our operations teams who have those systems that can kind of detect that behavior on the back end, it helps out, right? Looking at an alert, digging in a little bit. Those are some of the red flags that you can kind of say, hey, there's something different here, and just dig in.
And going back to your risk appetite and tolerance, if you find one, it may not necessarily be, oh, we got to get rid of them. They're done.
Correct.
Because we don't do them. They don't have to be like that. And the rules the ACH rules allow you to say, oh, we found a third-party sender. They've been a customer for 5 years. It's just come to our attention. If you report it then, you're fine. There's no harm, no foul. You'll start doing the due diligence with them at a different level. Red flags. Do you have any personal examples of third parties that, things started to go wrong? Things, maybe they were in one business and their business evolved. And I don't expect you to say any horror stories, but anything that comes to mind, it could be about a friend as well. If you've had a friend who ran into this situation.
I would just say a couple of red flags, right?
Yeah.
If the customer is really unwilling to sort of go along, to hear what you have to say, to understand their obligations, to have an open discussion about how they do what they do. And again, it could be a customer could actually show blatant disregard for regulations, laws, right? They just want to make these payments. They just want the money to move. Those are red flags. Those are definite red flags. There needs to be some more in-depth digging with those customers.
I would just
Dennis?
echo the same exact thing. It's just if the customers aren't willing to work with you, those are the red flags to me. If you've corrected them and say, you can't do this, you can't re-originate this, you can't pull this back, you can't claw that back, you can't do that transaction like that, you can't send a consumer transaction as a business or a business as a consumer, like all of those basic rules that you'll coach your customers about and they just don't change over time or they're just refusing to listen, those are red flags. Because I think you're just kind of waiting for something bigger to happen.
So we have a subsidiary called NEACH Payments Group, and they do audits. And one of the requirements of third-party sender is to do audits. And we've had those examples of a payroll company didn't know what a third-party sender was, didn't know any of the rules behind it. And when we first went in, they were like, "Oh, we don't need to change that. We don't need to do that. We don't need to do that." 3 years later, they're calling us and saying, "When are you coming in?" Because the rules help establish good practices. So
Yep.
that was the best story, because that first year they were like, and they didn't have an authorization. They didn't have whatever other pieces they needed. And you come in, you just clean it all up. And they were happy to participate. It was just new information. They never heard the word third-party sender before.
Most of the time it's just coaching. They just want to get on with their business. The bank can help them as much as they can and then move on. And most of the time clients are great.
Perfect. I'm close to my last question, and I realized I messed up. So I'm going to ask this question now, but just as background on you guys, how did you get into banking? Did you intend to get the job that you were working at, or did you want to be a banker all your life, or how did that work? Dennis.
Sure. So I actually started off more on the investment side. And I just needed a job, right? I had student loans. And so I started in what was called fund administration and kind of more on the institutional side. And then I moved to insurance, and I liked that. I liked the consumer side. And then from there, I really wanted to work on the consumer side of banking. I liked it. And so from there, I've been in banking since.
Excellent. Steve? I don't know this answer. I knew you a long time.
Yeah. Well, right, so it wasn't my lifelong dream. It's worked out well. But, similar to Dennis, I had bills to pay. I was working at a small company, and that small company shut down.
Oh.
So my dad was actually in banking all his career and loved his work, commercial lender. And so he recommended one, and I applied at a small bank, and they hired me into a management training program. And 3 years to the day later, they got shut down by the FDIC.
Oh.
But we were acquired by my current institution. It's worked out great. I actually did get into consumer credit and then commercial credit, and came into the Treasury Services area by networking within the institution. And they had a need for somebody who had, credit experience, and it's really worked out well. But yeah, it's just sort of been going from one step to the next rather than a grand scheme from the beginning.
Excellent. Just for the record, so far we've had one individual say, "Yeah, I wanted to be a banker." One. Everyone else just stumbled in. Excellent. So this is the last thoughts. This is open forum for you guys. If we want to do a little bit of scenarios afterwards, we can, as far as is this or isn't this a third-party sender? I know I have 3 examples in my head with variations, but if we have time, we can do that. Any final thoughts, guys?
Yeah, I would just say kind of what we were echoing before. I don't think people or banks in general should be scared of banking third-party senders. I think it's a really good vertical to get into. Just make sure you have your risk management practices, know what your risk profile is for a customer, and don't be afraid to say no.
Yeah, no, I would say, as far as the whole scary aspects of third-party sender, and not just from the financial institution side, from the customer side, right? As you say, Joe, these people aren't aware necessarily of all the rules and requirements that they have. But in my experience, most of the companies are conscientious. And when you talk to them, certainly about, so third-party senders are required to conduct an audit every year of their ACH activity. Well, they may have never actually sat down and formally written out an audit, right? Or engaged an outside auditor. But some of the fundamentals in an audit, right? As far as, are they getting a lot of ACH returns? Are they aware of the file dollar amounts that are going out? Are they what they would expect them to be? Do they have agreements with the companies they're doing ACH transactions for, right? And do they employ reasonable data security because they've got this information on people's accounts? I find that they do. They're doing it. They're reviewing their account activity on a regular basis. They address returns because they need to make that work. So it works out well. And even with the newer requirements of having of conducting a risk assessment that includes a risk management program, same. Again, it may not be formally written out this way. Sometimes it is, by the way. But they're aware of who within their company has access to the systems to process ACH. They're aware whether or not they have dual control, for example, on people processing ACH. They do user rights reviews on people in their company on a regular basis. Might be annually, might be twice every 2 years. But at the end of the day, most companies, like as I said, they're conscientious. They're doing the things that fundamentally play into an ACH audit. Then once you talk through what it's involved, okay, yeah, they've been doing that, they are doing that, and it gives them some relief.
Excellent. And, I agree. We say audit, and it sounds very formal and established. It could be just talking about their procedures. And, and when I think of a classic third-party sender, I think of a CPA firm that their association has said, hey, we have software that can do payroll. Do you want to do payroll? And they say, yeah, I'll do payroll. I can do payroll. And, how about if they don't collect the money when they send the money out, that becomes a risk because if you can't pull that money back, right? So you can't say I paid you, but the company didn't pay me, so I'm taking it back. Can't do it. So if you run into a situation where they're collecting their money on payday and they're paying people on payday, it's a problem. Just little, it's really, when it comes to a company, it really could just be their procedures is the audit. What are you doing? How do you manage this risk and this risk and this risk? Easy peasy. Let's try a couple of examples. Really easy one. Back to my CPA firm. CPA firm is sending out payrolls for Joe's Bakery. What's the easiest, and I'm looking for something specific, but how would you realize that they are a third-party sender in that specific scenario?
I think the answer is they're a third-party sender because the payroll is owed by the bakery to the bakery's employee. And the CPA firm is the third party who's putting a transaction through.
Yep.
Exactly right. They're not the CPA's employees, they're the bakery's employees. So it's not for their payments. All right, let's get into a two-version harder one. You have a property management company, right? And the property management company is given full rights to rent the properties, do all the paperwork, manage all the units. The properties could be condos owned by someone else, but the property manager is given all the abilities to collect the rents and all that, and they may use ACH to collect the rents. Where would you lean? Are they a third-party sender or are they not a third-party sender?
That's a good one.
I would say this. They are a third-party sender.
Yeah.
The transaction is the condo owner paying their monthly condo fee to the condo association, and the management company is the third party. That said, I think that where things can get a little cloudy is what level of due diligence would the financial institution apply in that scenario? Does that warrant the same level of due diligence as that business services company that we don't have that kind of information on? Do we have a greater comfort level? And that's where within the institution, the payments people, the operational risk people, and the legal people, need to decide whether there's going to be any different level of due diligence, whether initially or on an ongoing basis with the property manager. But I would say, yes, they're a third-party sender because they don't owe the money and the money's not owed to them.
I would probably echo that.
Okay, excellent. You're right. I think you're right. Barring any risk event, any trouble, newspaper, something blowing up, barring that, this customer, who decides ultimately if they're a third-party sender or not?
I think the bank
Steve and I,
does.
these are like all echoes of Steve and I conversations.
Yeah.
the institution decides. So it's if your institution looked at that and said, "Oh no, they're a third party. They're not a third party sender." Okay. If your institution, your lawyer came in and said, "Oh no, agent, so they are a third party sender." Okay. So there's no third party sender police. NEACH, you might have a conversation with NEACH, and we would say, "Well, I think they're a third party sender." You can take that information and say, "We're going to treat them like a third party sender." Here's the last example I've run into personally. This was in the beginning of my career. It was a struggle. So let's say there's Joe's conglomerate building universe. And I have locations all throughout Massachusetts. And I also have subsidiaries in other states that do just one part of the building process. And when I originate items from my conglomerate in Massachusetts. I also originate items for those subsidiaries. Third-party sender or originator?
I would come down on the side of originator on that, as long as there's common ownership. As long as there's common ownership, and you could consider common management. But remember the concern is with the true third party is the financial institution is disconnected from the entity, who they are, and all those things. And if you've got common ownership, common management, it's still your customer, just operating different entities.
I agree 100%. I've run into that where it's been a good half hour where you're walking through, well, who are they? They're a different company. Well, but they're a subsidiary. There's a lot of steps and a lot of identification throughout this process. As a listener, you'll get there. It's just you need more examples and more reading.
And can I just add quickly, Joe, because you've mentioned a couple of times, you and I have talked different scenarios through, and not to just give you a plug, but really NEACH as a resource, such a valuable resource, because you run into those scenarios you haven't seen before. You've got somebody and, you're thinking they might be a third-party sender, but it turns out they use the software, and their software provider actually processes the payments through some other financial institution. And then how does that? I've always found NEACH, willing to talk about these things and really a valuable resource to try to keep us on track.
Thank you very much, Dennis.
150% echo that. How many times that I would pick up the phone and call, and everyone they would jump right on it immediately.
Can I ask, Dennis, I'm going to ask you to do a commercial. We met through the NEACH compliance.
I think so, yep.
So talk about that work. I'm not really connected to that committee. Yep. What's some of the stuff you are working on with that committee?
Yeah, I think when we started, Steve and I are kind of the co-chairs, and it's kind of just what we decided collectively to have the group be is like a boots on the ground resource. Steve, would you kind of echo the same thing, or maybe in a different way? But you have tons of legal and all these other people that can interpret rules, and what we wanted to do is take that and turn that into the people who are on the front lines every day using it and have to execute those rules and give them resources. What's hot button topics? One of them, third-party senders, or Reg E, which Raylene is on top of. It's really just to kind of bring them resources in a centralized area and help them in any way that we can.
Mm-hmm. I would agree completely with that, Dennis. Well said, and right. We're all trying to meet the standards of what's commercially reasonable, right? And so what similar institutions do. So sharing information, is of great help, and it's collaboration. But really, it's as Dennis says, it's the frontline people, the people who are the operations side, the upfront side, and talking things through. It's hugely helpful.
And it really is. It's you guys in a room with other folks like you, talking about similar challenges. And it's really, I think a lot of times a person's trying to balance the rules, look at the laws, look at their policies, look at the orders they're getting, and think, they're alone in this. But you get in a room with other people that are doing the same or similar things you're doing. Yep. It's great because they get it. And you can share thoughts. How did you handle this? How did I handle this? Are you running into this? And it's funny because I just watched a promotion for an upcoming conference on something. And the literal feedback was, it was great. I got to network with people and talk about the same similar It's a human connection.
Yeah.
You guys are all in the same, having the same problems. Isn't it good to be able to talk to someone? And we just facilitate it. We're not leading it. We're not directing it. You guys are directing it. But it's really a nice opportunity. We have a couple of other committees, same thing. They get to share those ideas.
Yeah, I would just echo
All right.
the kind of same thing of feel free to reach out to us, me, Steve, or anyone else. If we can help, we will.
Okay, and I think we're going to get your information. It'll be on the episode, your LinkedIn connections. So people will be able to do that. If you have any questions, you can certainly reach out at info@wrestlingpayments.com. And thanks for listening.
Thanks, Joe.
On behalf of NEACH, your trusted resource in payments, and our guests, I'd like to thank everyone for tuning into the podcast. If you've enjoyed this episode and want to hear more about payments innovation and modernization, you can find the Wrestling Payments Podcast on the podcast page of NEACH.org or wherever you subscribe to podcasts. Just search for Wrestling Payments in your podcast app. Thanks for listening.